Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the podcast. We are honored to have a very special guest today who is going to discuss something and share her secrets to something that everybody can do. Now, yes, maybe not everybody. Let me rephrase that. But a lot of you out there who are real estate investors who want to get into real estate, or you got money sitting on the sidelines, you don't know, or you got some financial friends you maybe get a little scared about having to go out and buy a property or don't want to buy a property in your own backyard or instead of doing it across the country. There's other ways for you to become an investor or invest in real estate by using this strategy. Now, I'm not going to talk about that strategy right now. I'm going to let her do it. But we have the amazing Ashlee Edwards join us today on the podcast. She is an attorney, real estate investor, and private money lending strategist who empowers professionals like you and me. I don't know, maybe I'm not a professional, who knows, but and entrepreneurs to build wealth outside of Wall Street. She's the co-creator of a program called Lender Friends, and she combines her legal experience with hands-on investing experience to simplify complex strategies into actionable steps. And we are honored to have her here. She is one of the interesting people that will be meeting at FinCon here, or we've already met, obviously, but who is attending FinCon in Portland with me here next week. And so we're honored to have her. Good morning, Ashlee. How you doing today?
Good morning. I'm doing really well. How are you?
I'm doing great. Honored to have you here. I know we spoken before, and I love your backstory, how you kind of got started and stuff like that. But I think one of the biggest what you teach is I think is one of the biggest gaps when it comes to real estate investing out there that people don't know. Now, being a lender, being a mortgage broker in my background, being a note investor, understand the note side and private lending side. I mean, we've raised millions of dollars in private capital for our own stuff. But so many people don't realize not only how abundant private lending is, but also how to use it properly in their deal flow. How did you dive into this being your feather in your cap, I like to say?
Yeah, so private lending wasn't actually my intention. I had heard about self-directed IRAs on a podcast one time, and I was like, what are these people talking about? And then I heard it again on a different podcast, and that was just a sign to me, like, this is something I need to look into. And so I hired this law firm to help me get this set up because I wanted to use the money from my old 401k to invest in real estate. So I was like, I can use this for fix and flips, or I can do some burrs or whatever. And so when I was meeting with the attorney, he was like, I love what you're doing and I think it's great. But can I give you some advice? And I was like, sure. And so he said, my billionaire clients are not using their old retirement accounts for real estate investing. They're using it for private money lending. And I was like, I don't know what you're saying. Like, tell me more. And
Are
so
you
he
speaking
starts to
Latin to me? What are you talking about, right?
yeah, I was like, I have no idea what you're talking about. So then he starts explaining to me that instead of, being the landlord or being the flipper, they are loaning their own money to investors so that they can do the work and then they're just collecting a return. And I was like, so I can do that? Like, don't I have to be like a licensed mortgage broker and all these things? And he was like, well, no, it really just depends on like what you're doing, where you're doing it, and how you're doing it. But I have tons of clients who are doing this and they're just making crazy money. And I was like, wow. So that's actually how I learned about private money lending. Yeah.
As I say, it always pays to be the bank, whether you're owning the debt or you're creating the debt or the position to get the cash flow to come to you. And the
Mhm.
bank always gets paid is the way that I look at it. It's a great spot, and it's part of the note industry. We like to say it is being that private lender because you're creating mortgages, probably on mostly investment properties, not usually like probably not owner occupied stuff, right, Ashley?
Yeah, that's right. Usually, I encourage people to only loan to companies, not consumers. And sometimes it's the actual purchase of the property, sometimes it's just the rehab. I just met someone yesterday who actually wants to loan the funds to investors who want to start like a short-term rental, so the furnishing funds. And I was like, that's very different. So there's a lot of different ways to provide the funding, but usually not to consumers.
Right. Now, what did you do before you met with your attorney? What kind of investing background did you had? Had you done some flips? Had you done some rentals? What was kind of your background?
Yeah, so I hadn't done a flip yet, but I wanted to do one. But I did have several rentals. So I was at the time invested in North Carolina. So I had a long-term rental and a short-term rental in North Carolina. And then I was invested in, I think I was preparing for an investment in Texas. I was invested in California. I was also invested in Illinois. So these are just a mix of, short, mid, and long-term rentals. But the appeal of a flip was always there, but I was just like, oh, I don't know. And so I was really expecting to use that money to do my first flip.
Now, I have to ask a question. Most people are investing in their backyard. Were you living in these areas when you had these rentals, or were they through like turnkey providers or people that you, or just properties you found for sale that you bought and had a renter in them already? How did you kind of find those deals to begin with?
Yeah, so when I first started learning about real estate investing, it was through a course, and the creator of that course was based in Chicago. And we talked about just accessibility of the different markets. And so, as someone who lives in California, it can take a lot of capital yeah.
I'm holding up my fingers. You can see just a little bit of capital in
Just
California.
just a little bit more capital to get started in California. And so he really emphasized not being confined to your backyard because that's what holds back a lot of people. And so he was saying you can put systems in place to help you feel comfortable investing out of state. And so that's really what that course was all about. And so that was really my start. I was like, okay, well, my first one's going to be out of state then. And then from there, when I started to learn about, boots on the ground, building those relationships virtually, I started to feel more comfortable investing out of state. So I didn't have connections to those places. I thought they were good opportunities.
Yeah, I mean that's always the thing. I mean, we buy in about 20 to 30 states, and people are always like, "Oh my gosh, it's scary." I'm like, no, you make connections, you build relationships with people, you find some opportunities and
Yeah.
rock and roll from there. Now, when you started to become a private lender and your attorney was helping us, did you use, I take it, use your own funds to begin with, or did you start using friends and family funds or start marketing for funds? How did you kind of, that whole process of raising capital go about for you?
Yeah, so I actually only use my own money. Um, there have been times where I used debt to do loans, and I never recommend it. It's very enticing, but I've done it. It's not my preference, but I started just using my retirement funds from my old 401k. And then I realized like I could also just use my savings, and I have like a special loan structure that I do to do that to still get that liability protection. I haven't raised money from other people and loaned out their money. I've thought about it and I've talked to a law firm about it, about how to set that up. And it just seems like maybe something a little more advanced than what I'm teaching. And so I'm like, okay, maybe later I will venture into that space. But for now, I'm working with people who have, an old 401k, or they just have a significant savings, or they've inherited an IRA. I see a lot of that. Or even people who, I met someone who has a substantial brokerage account, and she's considering doing margin loans to fund some of her private lending deals. So just people who have like extra money, that they would like to get a higher return on.
Now, when you talk about how you use debt, was this a just like a mortgage to take a property, or was it like a one of those IRA, SDIRA lenders who will lend the rest of the proper money against the property? Can you dive in that a little bit more and clarify?
Yeah, so some people will do a loan by paying an invoice, for instance. So I did a loan with a restoration company once, and they had an insurance claim. So the insurance company was going to pay them out, but they needed to get the materials and they needed to pay their subcontractors. So instead of me giving them the cash, they just sent me the invoice and I used my business credit card to pay the invoice. And that was the loan, of course, with the documents and everything. So that's what I mean by using debt. I've also used like a HELOC to give loans. And I don't usually recommend this. I think you have to be a disciplined and prudent person to be able to do that. So I usually just recommend using your cash. But I've had people do loans with zero interest credit cards and things like that, So there's a ton of different ways to do it, but I usually just recommend using your cash. Yeah.
Now, are most of the loans you're doing, are they short term, or are you doing some long term? And by, I guess you could say short term, 12 months or under, or 12 months and longer.
Yeah, so every private lender is different. For me personally, I loan for 8 months or less. And the reason for the 8 months is because when I first started, I said 12 months or less, but then I was like, I can only flip my money once in a year. You know what I mean? Especially if I loan out my max amount. And so I decided on 8 months because then that could give me enough time to do a shorter term loan in that same year. But yeah, typically, so the shortest loan I've done was 1 day. And the longest I've done was 8 months. I did a 12-month one a while ago, but I'm not doing that anymore. Uh,
Well, but eight times, if you do it 8 months, you can technically flip the money 3 times in 2 years. You know what I
yeah,
mean?
yeah, yeah, that's true. So that's still a strategy, but now I'm looking more into like micro loans, either in amount or in time frame. So because I just want to be able to turn it over multiple times before my early retirement. So
Sure.
that's the plan.
On the 1 day was like a just like it was like an earnest money loan or a deposit loan, basically. Or
No, it was a loan to a contractor, a general contractor who was on an active project and needed to pay the subcontractors, but the client was late making their payment. And so they were like, I don't want my guys to walk out on me. I just need to pay them today, like it's an emergency. And then they paid me back the next day when the client made the payment.
so I got a question about that stuff. So what kind of security do you have with those microloans, and then kind of what kind of terms are you looking at as far as being paid to you?
Yeah, so usually with general contractors, if they're not doing a fix and flip, the security won't be the property because the property actually belongs to the client. So what I usually do for every loan is a personal guarantee, but sometimes I'll also cross collateralize. So if they have like their own primary residence or, for the restoration company, they have certain business equipment that they use. I may attach to that. But for the 1 day one, it's just too hard. It was too fast. So for that one, I actually didn't even use any security, which I would never recommend as well.
Okay, good. I'm
Yeah.
glad you just said that. Let's make sure and disclose that there. But
Yeah.
you knew that person, I take it. Maybe they lent with you lent with them before, or had a good
I had
relationship
already
with them.
done like 20 loans with them. So I
Oh,
was like,
yeah.
okay, this one time I will do this, but I never recommend not securing the loan. And that was very risky, right? It was $3,000, so I could have just been out of $3,000. But I weighed the risks against the benefits and I was like, okay, this is a long-standing relationship. I've done multiple loans. They've never not paid me. Let's just see how it goes. And it worked out, but I never tell people to do that. Yeah.
Yeah. Well, but you made some money before with them, obviously, 20 loans, and they
Yeah.
paid. That's different than somebody who's just off the street you don't know, you
Yeah,
know.
that's right. That's right.
And with you using your own loans and stuff like your own money and stuff like that, what kind of terms are you looking for? Let's just say it's beyond a 1 day thing, like a normal 8 month loan. What are the terms?
Yeah, so every private lender can set their own rates, which I love. So for me, I don't go under 10%. And I came to that because I think about, what I could earn just by having my money sit in the stock market and do nothing. I think about just average rates of return and like how fast I want to grow my account. And so I decided that 10% is my minimum. More often than not, because I lend to fix and flippers and general contractors and restoration companies, I'm looking more like 15%, especially with restoration companies because their profit margins are crazy. I mean, especially if they own the equipment, like it's phenomenal. And so they can give you 20%. I've received 40% before, and they're like, it doesn't hurt me because I'm getting this much. And I'm like, oh, okay.
Well, and you're also on those, you're in a second lien position, I imagine, or you have a UCC1 filed to the county against their stuff.
Yeah, so with the restoration company, you are attaching to their equipment, other business assets, getting a personal guarantee. You may also be cross-collateralizing depending on the amount of the loan. So you may be attaching to their primary residence, like whatever is available that can cover the cost. I usually try to go for 2 to 3 times the value of the loan.
Makes sense because if there is default, and that brings me to the next thing. How what's your default rate on some of the stuff? You have had people not pay, or how's that worked out
Yeah.
for you?
So I've had, well, okay, I had a person in default. Technically, they ended up paying, but they were waiting for a payment from an insurance company, and the insurance company didn't want to send the payment directly to me. So there was a whole mishap with that. They ended up paying it and it was fine. But I would say the biggest default I've had is actually something that I'm still dealing with. So I had to modify the loan. So it was a fix and flipper and the property just wasn't gonna sell for the amount that they thought and not in the time frame that they thought until they told me a few months before, and we just modified the loan. So what I usually like is a flat fee payment and a balloon payment at the end, but for this one I had to do something totally different and something that I never do. So we structured it so that they make weekly payments and quarterly payments. So that's the main one I would say. Other than that, I haven't had, praise God, any uh any defaulting other than the insurance company one. Yeah.
So on that one, I mean, what was it? You said you got basically you were waiting to get paid at the end of that, and they went through their term and said they couldn't pay because it wasn't going to sell. So then you restructured it. You said you get weekly payments and then the quarterly payments. Was it like a buy down off the loan, or how's that working when you say weekly and quarterly?
Yeah, so just to back up, I could have foreclosed on the property. That was an option. However, I've done several loans with this company and I just didn't want to do that. And I appreciated that they told me ahead of time that they didn't see it going the way they wanted. So what we did is we paused the late fee. So in my document, I have a late fee provision, and we decided to do a cap on the late fee. And so we literally wrote a new loan agreement, so an amendment to the original agreement, and created like a payment plan. And we considered monthly, we considered just quarterly, but I just didn't feel comfortable with that because I felt like this is going to take me forever to get my money back. And I don't have that much time, you know what I
Right.
mean? And so what we did is cap the late fees, kept the interest the same, and then divided the payments up weekly on Mondays, and then lump sum payments at the end of every quarter so that they can pay it off faster.
Okay.
Yeah,
What
so
kind
that's
of
how we did
amount
that.
total was this? No, I'm asking.
This was a $50,000 loan.
Okay.
Yeah,
Now, was it a second on a fix and flip or a first or what was it?
it was a first. So the fix and flipper acquired the property through a wholesaler and paid cash. So it was a great deal. The market shifted. Some things changed with their scope of work. So what they originally planned to do for the flip didn't turn out to actually play out because I guess there was like a tree growing under the foundation,
So they had
and
some their rehab was more than what they thought it was going to be, then I
the
take it, huh?
rehab was way more than what they thought it was going to be. They had to get cranes and like lift the property. It was a mess.
Where was it
So
located? Was this in California or was it
it's in
somewhere else?
Texas. No, I don't
Oh,
loan in
where at in
California.
Texas here? Where at in
Yeah,
Texas? Do you
in
remember?
Houston. Yeah,
Oh,
in
okay.
Houston.
Okay.
Yeah. Yeah, so I don't loan in California. It's not, you need a license to loan there.
No.
But this was in Texas, and yeah, they thought that when they first saw the property and they saw the tree, they didn't know that it was growing under the property. But they soon found out. So
Right. So what are the things that you are lending on? You obviously are you moving money into an LLC with private funds or you're funding directly out of a self-directed IRA? Is that correct?
so this is the conversation with the attorney as well. So we set it up so that I have the self-directed IRA and the IRA owns an LLC.
Yep. So an
Because when
IRA LLC. That's good. Okay.
exactly, an IRA LLC. So when I did the rollover, I didn't want to put everything into the LLC. So I put some into the stock market, and then I put some just I just left it, and then I put some in the LLC. And so when I do the loan, it's from the LLC, not directly from the IRA. And the reason we did that is to isolate my lending activities from the rest of my self-directed IRA. So that's how I do it with the IRA. When it's my personal money or business money, I loan from an entity. So not in my personal name. And if it's my own funds, like let's say I have my savings account and I'm just bored with it and I want to loan it out, I will loan that money to an entity that I have and then from that entity loan it out to someone else.
Oh, yeah, very nice, very nice. Um, what's what's some of the things in the due diligence side that you're doing before you're approving the loan? Are you pulling comps? Are you looking at the scope of the rehab? Obviously market value, where they're at. What are some of the things that you really need to hone in on as far as as far as values and security amounts before you end up funding?
Yeah, so I think this is why it's important to only loan in an industry you understand. Because the due diligence really can change depending on the industry. So I was already investing in real estate. I had already invested in a ton of education to do real estate investing. So it only made sense for me to just do loans based on real estate. And so when I'm working with like a fix and flipper, for instance, they're presenting me their information. So they're like, okay, this is my purchase price. This is my ARV based on these comps. This is my scope of work, et cetera, et cetera. So it's very consultative because then we're going to have a meeting and I'm going to tell you the comps that I found, because I'm also educated in this space and I may not agree with the comps that you have. I'm going to ask questions about the scope of work, So for instance, one gap I often see is there's no contingency line. There's no line item for insurance. A lot of these fix and flippers are out here just without insurance. So I'm also
And that's gotten very
evaluating.
expensive too in parts of the country, like Houston, Florida.
Yeah.
That number has changed dramatically over the last couple of years.
Yeah, exactly. So I'm also evaluating the deal alongside the investor because I mean, my money's at stake. Uh, their money's at stake. And a lot of times, I would like to require that they put skin in the game, not just, using all my funds. I want to see that they put some money in it too. But then if you do a different type of loan, so for instance, I had someone come to me who was a fashion designer and I was like, I don't understand this business. So she was asking for like a $5,000 loan for 3 months so she could bulk purchase the fabrics for her business for her fall line or something like that. And I was like, this sounds great and the numbers look great on her cash flow, but I was like, I really just don't understand the industry. So I can't help you. So I just referred her to someone else. I really think that people should loan in spaces they understand because like I don't even know what questions to ask a fashion designer. Like, you know what I'm saying? Like I wouldn't
Right.
know.
Is your spring line going to be great or is it going to flop? You know what I mean?
That's what I'm saying. Like I
Do you
just really
do you
would.
go there and like give me a photo shoot of your models back and forth there so I can determine where I like it or not?
Yeah, so I was like, I'm sorry, it's really enticing, but I just cannot help you with this one. But yeah, I encourage people to know the industry, and that'll help you create a due diligence framework for each type of loan. Yeah.
And then also state specific too, if you're in an area, knowing what kind of documents you need to. How difficult has that been lending in different states?
I don't lend in a lot of different states. So I usually recommend just like, one or two to start. And then as you get comfortable and your processes are clear and you have a clear risk management framework, then potentially add on another state. But I do know someone who started out saying like, look, I lend in all 50 states. And I was like, okay, I don't know how this is gonna go. And they were like, I do all types of loans. And I was like, that's a lot of regulation to keep up with because every state has their own rules and they have their own usury limits, they have their own foreclosure processes. Like it's a lot to manage. So right now, I'm just sticking to Texas. I'm thinking about next year, moving into like Alabama. I've been looking at some of their laws. I'm like, okay. Oh, you think no? Why? What's wrong with Alabama?
So Alabama has a if it's becomes owner occupied, and I know that you're lending to entities and stuff like that to get it, but it's
Hmm.
still they can be a 1 year redemption period once you foreclose if you have to foreclose.
Oh,
So
geez.
yeah, so
Is
I
that only
think
for consumers or is that for everyone?
mm, it all depends because we've had contract for deeds there, which is the loan document, stuff like that. We can evict in that aspect of things.
Hmm.
But if you're going to traditional mortgage, it can take longer than was it 6 months to foreclose and something like that. So if I was recommending it,
Okay.
my own money, laying my own money, Texas is great. It's the fastest state to foreclose in. Georgia, second fastest at
Georgia. That
30
was on my
days.
list. Okay,
Georgia
Georgia.
Georgia's good.
Okay.
Your non-judicial foreclosure states are going to be the fastest thing. So like North
Yeah.
Carolina, where you've already got a bit of a network there, that's not bad.
Okay.
Virginia, Missouri,
Okay.
Michigan, you know, those would be probably the states I would stick with to begin with for the
Okay.
most part. What when you're looking at being in a second lien position
Hmm.
on some of these, what's your cap off, CLTV with these off the ARVs? Because you're usually lending on property, so there's going to be an after repair value. Where are you looking at for combined loan to value?
Yeah, so I don't have like an exact number that I'm looking at. I'm really just looking at what can cover the loan amount plus the interest. And so let's say that they got a loan in first lien position to purchase the property
Yeah,
and maybe they only have 20% equity in that loan. Um, that's likely not going to be enough to cover what I've loaned. And so if I am in second lien position, I kind of just count that as a wash and I'm like, well, I need other collateral
yeah.
to protect my interests. And so I need collateral that's worth 2 to 3 times what I've loaned to you. And I'm looking at assuming you don't even finish this project, right? Because you have a first lien and you could just decide, just kidding, I don't want to do this anymore. And so when they have to go through their process, I'm not going to be considered at all. And so I'm looking at the other things you own to see where I can recover, and not just relying on being in that second lien position or whatever equity they think they have. It's just right now, I think it's too unpredictable,
Yeah.
to rely on just that single position. So I look at other collateral. Yeah.
So basically, like if there's a 70% first and you're a 10% second, you'd want to see 2 to 3 times behind you in equity. That way you're making sure the first is getting paid in full and then you're getting paid in full on that as well.
Yeah, but even then, like if I'm in second lien position and it's a flip, I don't use the ARV to determine the
So you'll end
LTV.
up to 100% of the purchase price, basically, provided that the ARV is higher or not.
No. So I don't usually loan on the purchase. So I'm not doing,
Right. I get it. But what I'm saying is if you're lending in a second lien position, that's what I'm trying to get because our audience out here is if they're buying property and they get they buy, use a hard money lender for first lien position at say 60% of the purchase price. Will you lend like a 10% if it's 70% and there's 30% behind you or up to
oh yeah.
80%? Okay. All right.
If
That's what I'm
if
just trying to
it's
clarify.
if it's of the purchase price though, not the ARV.
Right. Right.
Yeah.
Okay. That makes
Yeah.
sense. Just wanting to clarify that because
Yeah.
I guarantee people are like, oh, you should go up to 90% of purchase price. Let's do
Mm-mm.
it.
Will not.
Yeah. And
Yeah.
so you're using your IRA LLC, which makes it a little bit faster for you. I'm sure you're still having to run your paperwork through your custodian just to double check initially that everything is still matches up and doesn't violate anything with the IRA, correct?
No. So I don't have to run paperwork through my custodian. I think it's because of the LLC structure though, because I do have lenders in my community who do have to run their paperwork through their custodian.
Okay.
But I think there's something about the IRA LLC structure that removes that requirement.
Sure. Now, the
Yeah.
question leading from that question is who helped you create your paperwork in your different states? Do you have a real estate attorney that helped you out with that? Or did you just buy something off of like legalzoom.com? Or how did you kind of create your initial first paperwork, especially here in Texas?
Yeah, I actually worked with the lawyer that helped me set up the IRA LLC. So after he exposed me to this new information,
Exposed.
I
It makes me think of him running up doing like a trench coat and opening up, and there's a classroom under his trench coat. He exposed you to it. That's funny.
that's kind of like that's kind of how it felt. But I actually paid him to help me create my documents. And so those are my initial set of documents. I've also worked with Fortra Law
Yep.
Firm prior or previously Jurasi Law Firm to look at documents. That's another thing. Like if you're loaning in multiple states, like you have to have state specific documents for every single state. And it's a lot of, I mean, the cost is high for that. It's a lot of work, a lot to maintain because, you want to update those at least annually. And yeah, I don't.
Yeah,
But yeah.
some documents have to have two witnesses to sign them. Some have to have two notary stamps for every witness, or one can suffice. Yeah, well, the biggest thing is there. Use an attorney to create your paperwork. Don't just like pull something off of some generic loan docs. That's not a good thing, ladies and gentlemen. I saw
Yeah.
somebody who's lending their own money, 40, $50,000. There's no notary, there's no address of the property, there's nothing collateralized on it. And that lender ended up passing away, and his son was trying to collect. I'm like, there's nothing to collect on here. This is worthless
Mm,
paperwork. One might be collectible because it's got an address and stuff like that, but the rest of all is just like signature loans with no address and no phone numbers or nothing to track down these borrowers.
mm, that's unfortunate.
Yeah.
That's in Texas.
Yeah, the guy was in Texas. I'm like, this is worthless paper. Sorry, man. So
Mm.
what's your plan? I mean, what's the long term for you, Ashlee? What are you looking to do? I know you got some classes and stuff that you're working on. You want to talk about that a little bit with our audience?
Yeah, sure. So long term, my goal is to free myself and help free other people. So I am looking at early retirement and um, even in that space, I plan to continue to do loans and teach people how to do loans. So right now, I offer a quarterly private money lending accelerator. It's 4 weeks and it's not self-paced. I have to always say that. It is very much pre-planned in
Hands
terms of
on.
the pace. It's very hands-on. We meet for 3 hours a week. And we just set the entire thing up. And then, but even before it starts, though, so right now I'm meeting with people one-on-one to make sure that they have everything they need so that when the accelerator starts, they can literally hit the ground running instead of trying to gain their bearings. So,
What kind of amounts do you reckon people start off with? If they've got 50 grand to start off with, 10 grand, 100 grand, obviously the more the merrier, but what's kind of the limit to you? If somebody comes to, well, I got 5 grand, I want to be a private lender. Is that
yeah,
feasible? Does that make sense?
it depends on the type of loans they're doing. So, I did have a student who had 5 grand to loan, and she was interested in business purpose loans, but also interested in fix and flips. And so we talked about, for fix and flips, that may be a bit harder, especially because she was in Georgia. And I was like, it may be a bit harder, if you were in like a Ohio, in certain places it could work, but you may want to stick to the business purpose loans for now until you can grow more capital. But what I see often is I'll see lenders come in and they have more than $50,000, but they're comfortable with their first loan being about $10,000. Um, so, I mean, if you're doing something like earnest money loans, the amount can really vary. It could be $1,000. I've had someone request a $2,000 earnest money loan for me. So the amounts can vary depending on where you are and the type of loans you want to do.
Awesome. Awesome. Good stuff there. What's the best way for our listeners and watchers of this here to find out more about that class? What's the website? Or we'll make sure to put it in the description, but if you want to say what it is and stuff like that for folks to check it out.
Yeah, so they can learn about the accelerator by going to accelerator.elevate with Ashley with two E's.com. They can learn more about Lenders and Friends by going to our website. So it's LNDRS, letter N, and then FRNDS.com. So Lenders and Friends with no vowels, basically.
We've got that. We'll put the link in the description there for you guys to check out that for you. Now, you're going to FinCon, I think was it for the first time? Is that right? Or second time?
Yeah, it's for the first time. I'm so excited.
Very
Yeah.
nice. What are you most excited about? to take place in Portland the next couple days.
I'm excited to meet people. Honestly, I didn't expect to have met people like you before even going to FinCon, so I already feel more comfortable. Some conferences I feel like it just feels a little stuffy and it feels challenging to meet people, but I don't know if it's just the people going to FinCon or like the vibe that they've created, but people are very interested in meeting each other and working together, which I love. And I feel like it's already happening, and I love that. And so I'm excited to meet people, learn about their journeys and, how I can offer support to them and how we can work together. And, that's what I'm most excited about.
That's the thing. There's not a better environment as far as friendliness and co-opetition, as I say. People are
Yeah.
doing their own thing, and we're all competitive, but we all like to collaborate and share ideas. And really, the thing I always love is just the people's great, but also walking away with actual content and things I can actually put in place that will help my business immediately. And I know that you'll walk away just blown away as well.
Yeah. What are you most excited about?
The people, literally, I've been using the app quite a bit to make connections, so I've got some back to back, and you've got some friends that we're talking with later too, which is kind of funny. We had a great podcast episode recording with somebody else is going to be there. I've got a couple more lined up. That's just, you never know who you're going to meet vendor wise, sponsors, affiliates, and just amazing people, as we like to say, financial friends too out there.
Yeah.
Because here's the thing, I always find that our audience is very action. We've got folks too that are listening to this podcast, whether it's now or new listeners who have money they're looking to put to work. And I think your program would be a great aspect for them starting off to learn that process of putting their money to work. And it's funny, we just recorded an episode on using your SDIRA. We actually just had a big
Oh,
an IRA LLC entity, bank and a IRA company does self-directed IRA LLCs just reach out. So it's kind of kismet that where you and I are talking because about some of those things we're doing episodes on afterwards here. So that's I don't know what your faith, but I think that's divine intervention in a lot of cases when things happen
I
like that.
agree. Yeah, this is really going to speak to some people, especially if they want to know, how do I use my old 401k to do something like this? So
Yeah.
I'm glad you're
What
doing
part
this
of what
work.
exactly? What part of California for where do you live? LA, is that right or where?
Yeah, I live in Los Angeles.
Very nice. Investing all across the country. You know what I mean? Everybody, that's
Yeah.
something you guys that are listening, because we know, folks, there's opportunities everywhere. You just got to leverage your network and leverage events or leverage social media to find people and make connections. But there's opportunities everywhere. Ashlee, thank you so much for coming on here and sharing your wisdom and some of the stories there and how you've become a private lender and how you're helping others to go out and be a private lender as well.
Yeah, thanks for the opportunity. This was fun.
Awesome. Good stuff. All right, guys and gals, that's going to wrap it up for this episode. Make sure to check out the links in the description there for you. Uh, Reach out to Ash if you've got questions. If you've got some money burning a hole in your pocket, an old IRA from an old job or something like that, and maybe it's not enough to buy a property, but maybe it is to lend on that property to somebody who's looking to fix and flip. Definitely network with people. Go out to your local self-directed IRA, not self-directed IRA companies, but also your local real estate clubs. There's always people there looking for gap funding in some sort of fashion. And this is a great example of what you can put some small amounts to work, making above average return. So go out, take some action, everybody, and we'll see you at the top. Hey, real estate investors. So you want to dive into the world of note investing, but don't currently have the funds to sign up for an expensive class or a workshop or one-on-one coaching. Well, then you definitely want to check out the biggest bang for your buck in the note world, and that's our WCN membership. It get you an all-you-can-learn access to our class workshop replays, tapes, weekly coaching calls. For $97 a month, it's the biggest bang of the note industry because you get access weekly with me. You can book one-on-one phone calls with me. As we get different tapes in, we'll share them with our members after our one-on-one coaching students get access to us. We share a variety of tools, like I said, replays to the previous workshop, special discount codes to other events that you can take advantage of to help you get more bang out of your dollar every month. We've been investing in notes for over 20 years, and one of my biggest passions is helping note investors, big and small, get started buying notes. Yes, I got started years ago with no money, no savings, and no list. And I love helping people close on their first deal, get their first private funding partner to help them fund more deals and help them both make above average returns. If you're looking for somebody to help you take your note investing from 0 to 60 and want to get started, my WCN membership is a great place to get started. Like I said, we upload lists to it, video training, coaching calls for $97 a month. What can go wrong? The only thing we ask is you hang around for 6 months, and then if you don't like it, you can cancel. But check it out at noteumbrella.com. That's noteumbrella.com. That's our WCN membership. Get looking at assets today. Start putting your fingers on the trigger to pull the trigger on some note deals here before too long. Yes, anybody can buy notes. I don't care your age, your savings, what race, color, whatever it is. Note investing is all about what action you take, and the first action you should take is signing up for our monthly membership at $97 a month. That's noteumbrella.com. You can also access it by going to weekclosenotes.com and checking on the monthly membership. But we are here to help you. Scott Carson, the Note Guy. We look forward to seeing you at the top.